Then we have the purchase price. And the purchase price of each desk is 25 cedis. So how much is the purchase price? Purchase price. Purchase price is what? $25. Is it dollars? Yeah. $25. Then we have the ordering cost per unit. There are ordering costs of 20 cedis for each order placed. So that is the ordering cost. Ordering cost per unit. And that is how much? $20. Then we have the holding cost. The holding cost, inventory holding cost, amount to 10% PA of the what inventory value. PA, I don't why PA. So 10% PA of what inventory value. So the key word is what inventory what value. 10% of the inventory value, right? So now, how much is the inventory? The inventory value is what? The best purchase price. The inventory value of is what? The purchase price. So the holding cost per unit. The holding cost per unit is basically what? 10% of the purchase price. So what is the purchase price? $25. So that is what they are telling us, right? That is what they are telling us. All right. So this is the whole summary of the question. And then calculate the inventory cost per annum for the following order quantities and the economic order quantity, EOQ. So you know the EOQ formula, right? So we calculate the inventory cost per annum for the following order quantities. If you calculate for the order quantity, that is what you have been given. Then when we are done, we find EOQ, right? EOQ. Now let's go to our working board. Okay. So now let me list the items. So annual demand was is it 400,000 or 40,000?
It's 40,000.
It's how much? 40,000. Okay, yeah, 40,000. So 40,000. Yeah, 40,000. Then the purchases. The purchase price is $25. Ordering cost per unit is how much? $20. And then holding cost per unit is how much? 10% of what? Inventory value.
$25.
The purchase price of the inventory, which is $25. Right? So now they have given us different quantities, order quantities, and they want to know which of them gives us the least cost, right? Which of them gives us what? The least cost. So either they order 500 units, or they order 750 units, or they order 1,000 units, or they order 1,250 units. So they want to know which of them gives us the least cost. Annual demand is what? 40,000. They want to know whether we should order 500 units, first batch, second batch, 500 units, 500 units, 500 to sum up to the 40,000 annually. right? Also, we want to know whether we should order 750 units, 750 units in the first batch, 750 units second batch, 750, 750, which will sum up to what? 40,000 for the annual. 1,000 units every time, 1,000, 1,000, which will sum up to the annual 40,000. 1,250 units, 1,250 units, which will sum up to the what? 40,000. So when we do this, we want to know which of these get the least cost, because we know that what is the use of the EOQ? The EOQ gives us the minimum optimum level that will give us the what? Least cost. Economic, right? So the economic order quantity in which of them gives us the least cost. So that's what we are coming to do. Which of them will give us the least cost? The one that will give us the least cost is the one that is the best. But it might be the best among the four of them, but then
Please, am I the only one who can't hear anything? Hello.
I think it might be the network. He has left the group, the meeting.
Oh, okay. Thank you. Yes. Hi.
Hello. Hello, can you hear me? Hello, can you hear me?
Hello, sir. Yes, please, we can hear you. Hello.
Hello, can you hear me?
Hello. Yes, I can hear you.
Can you hear me?
Yes, please.
Hey, so all this while I was, I didn't join, and I wasted the time. Oh, I was teaching all this while. Oh. Can you see my screen? Let me share my
You
screen.
left the group. Oh.
Hey, I sent back here.
You left the
I
meeting.
was teaching. Oh. You see, I thought you guys were not speaking. You see some of the disadvantages. So you guys were not, you were just muted. So I was just continuing. Not knowing, so you can drew out. Okay, I have not gone far. You, I'm sure you can see my screen, right?
Yes.
Let me hear from you so that when I'm off, I know that I'm off. All this while I thought I was online. That's why I saw this guy calling me, but then I I didn't want him to distract my network. That's why I didn't answer. Oh, anyway, let me go through quickly. Let me actually let me record. Okay. So as I was saying, this are the what holding cost per unit is what 10% of the $25, right? So the total inventory cost is ordering cost plus what holding cost. Why? Because there is no what discount in this question. In this question, there is no discount. If there was discount, you would have seen that assuming, or they will tell you that if you order 500 units, you get a discount of 1%. If you order 1,000 units, you get a discount of 2%. In that order, right? So if you order 2,000 units, you get a discount of this. So you can see that this question, we didn't have any what discount. There was no what discount. So because there was no discount in this question, then the total inventory will be equal to what? Ordering cost plus holding cost. Are we fine?
Yes, please.
Okay. So now at 500 units, 500 units, what will be the effect? So we want to know the one that will give us the least cost. We want to know the what? One that will give us what? Least cost. So at 500 units, what will be the cost? So we know that the cost is what? The ordering cost plus the holding cost. So what is the ordering cost? Ordering cost is the number of orders times the ordering cost per unit. So the number of orders is the same as the annual demand over the EOQ. Here we are not using the EOQ, economic order quantity, because they've given us the quantity already. That's why I said here that. That's why I said here that EOQ is equal to what? The Q, right? EOQ is equal to what? The Q.
Yes.
So, and you can also see that. So what then is the economic cost of ordering? So the cost of ordering is annual demand over the EOQ. And I said this alone gives us the number of orders. Because if you want, let's say you want you want 100,000 units. You order 100,000 units a year per annum. And each time you order 100 units. 100 units. If you want to know the number of times you order or the number of orders, then you divide the 100,000 by 100. And they know the number of orders, number of times you order. So if you order the first 100, one order, 102, that is second order, another 100, three or third order. What I say? So that is the number of orders here. That is the number of orders that you are seeing there. So that is why the formula is saying that. The formula is saying that the number of orders is what AD over what Q, because I'm not using the EOQ, times the number of ordering costs per unit. So that's why I'm getting this. So 40,000 over 500 times 20, what are we getting?
$1,600.
1,600. 1,600. $1,600. So that is for the ordering cost. Holding cost, what will be our holding cost? Holding cost is what? Is the Q economic order over 2 times the holding cost per unit, right? Times the holding cost per unit. So now, what are we getting for that 2? That is, what is the economic order? What is the quantity? Sorry. What is the quantity? What is the Q? Q is how much? Quantity.
500.
500. 500 divided by 2 times the holding cost per unit. What is the holding cost per unit? What is the holding cost per unit?
Holding cost per unit is 2.5.
10% of the what? 25, right? So
Yes, please.
okay. So that's 2.5.
Yes.
All right. So 2.5 times 500 over 2. What are you getting?
You get 625.
So 625. 625. So now, what will be the total inventory cost? What will be the total inventory cost? What will be the total inventory cost?
2,225.
2,225. 2,225, right? So that is the cost of the inventory at 500 units, right? At 500 units. So let's do for B, right? Which is at how many units? At 750 units. At 750 units. Yes. So at 750 units, sorry, at 750 units, at 750 units. So at 750 units, what is the reorder cost? Or what is the ordering cost?
40,000.
Cost of ordering. Total cost of ordering is what? Is the annual number of orders times what? Holding cost per unit. You can see it at the top. Total cost of ordering, right? On the total. So that is the AD over what? Q times the ordering cost per unit. So what is the annual demand? 40,000, right? All over the Q. Q is 750. Q is what? 750.
750.
Times the ordering cost per unit. What is the ordering cost per unit?
$20.
So that is $20. $20. So what are you getting?
166.66.
166. So run it to the nearest whole number.
Okay, so it will be 1,067.
1,067.
1,067, yes.
Okay. All right. So then what is the holding cost? Holding cost is what? Annual demand is what? The Q over 2 times the holding cost per.
Times.
So what is the Q? What is our Q?
750.
Q is 750 all over 2 times holding cost per unit, which is what?
2.5.
2.5. So what are we getting?
$936 to the nearest whole number.
Okay. Is to the nearest whole number is how much?
938.
30 what?
38.
Plus 1067 205, right?
Yes.
200. So this is also the cost of inventory at 750 units. When we order 750 units each time, this is the cost.
See.
Then C is what? When we order
at 1,000 units.
at 1,000. So 1,000 units. At 1,000 units.
AD over Q.
That's what? That is ordering cost will be what? AD. So now we know the formulas. I'll not be writing the AD again. Yes, that will be how much?
Yes.
40,000 over 1,000 times ordering cost per unit is $20. So how much is it?
800.
800. And we have the holding cost per unit. Holding cost, total holding cost, that is also Q over 2. So the Q is what? 1,000 all over 2 times 2.5, right? And that is giving us how much?
1,250.
1,250. So what will be the total?
2,050.
2,050. 2,050, right? Then the last one will be what?
G at 1,250.
So that is 1,250 units. What is the ordering? Total ordering cost. That will be what? 40,000 all over 1,250. And what's the ordering cost per unit? $20.
$640.
That's given us 640. And then what is the holding cost?
Holding cost will be 1,250 over 2 times 2.5.
Times 2.5. What is that giving us?
To the nearest whole number, 1,563.
What are you getting?
1,563.
Okay, so the total will be how much?
640 plus 1,563. 2,200. What?
I had 1,600.
If someone say we can't hear you. Increase your amplify your voice.
1,600 for the holding cost.
Holding cost.
Yeah.
1,250 divided by 2 times 2.5.
Yeah.
What are you getting?
1,600.
Hey, which of them are you?
No.
Which of them are you talking about?
The one you just did.
The holding cost is 1,250. 1,250 divided by 2
times 2.5.
Oh, okay. Okay. I said it was 1,280.
5, 6, 7. 2,203.
The lady who said she is getting a different answer. Are you fine now?
Yes, please.
All right. Thank you very much.
Yes.
Okay, so now after the inventory cost, and now we are done computing the inventory cost for each of them. Now, which of them is the best, or which of them is the best? 500 units. Should we order 500 units each time we order? 750 units each time we order? 1,000 units each time we order? Or 125 units each time we order?
750 units.
Why 750 units?
Because it has EOQ of 2005. That's the smallest amount. The other figures.
So 125 give us a cost of what? 2203. Go to the second one, 1,000, cost of 2050. Go to the 750 units, it gave us a cost of 2005.
2005.
Another one give us 2250. So which of them had the least cost? Which of them gave us the least cost?
That's the 750. 2005.
So therefore,
750.
ordering 750 units each time reduces our inventory cost. Reduces our inventory cost. So if you order what 750 units, that will give us the least cost. Now, that is it for the first part of the question. The second part is saying that and find the economic order quantity. So let's find the economic order quantity. So now these are quantities that normal quantity you have been given. But yes, and we are saying that the 750 should order 750 units each time to reduce our cost. But the question is it the best unit that we should order? Among these, it can be the best among the four of these. But then, is it actually the best? So the EOQ would confirm, because the EOQ, the economic order quantity, the best, the optimum quantity that gives us the what? The least cost. So let's compute the EOQ using the available information to determine whether actually the 750 units, we ordering 750 units is the best. So let's try that. So let's compute our EOQ. EOQ. EOQ is how much? Is what's the formula? Square root of what?
Square root of 2 times
demand times what? Cost of ordering, right? And at 2DCO. Cost of holding. That is the inventory. So what is the annual demand? Demand is how much?
40,000
times the cost of ordering is how much? 20, right?
20.
All over the cost of holding, which is 2.5. That is the 10% of that, of the 25. So that is 2.2. So what is our EOQ? What is the EOQ?
Times 40,000 times 20 equals 2.5. 800.
800.
800 units. So you see that the EOQ is saying that the best to order for a year is 800 units. But then the normal demand, the normal quantities are saying that it is what, 750. say that the 750 is the best because it's giving us the least cost among the four of them. Okay, that is the maximum quantity that gives us the least cost. So now let's use the 800 to also determine. Let's determine the cost of the 800 units. Let's determine the cost of the what of the EOQ. So EOQ, EOQ 800 units. So at 800 units, what will happen? So what will be the
40,000 over 800 20.
What will be the ordering cost? Ordering cost is what? Annual demand. What is the annual demand?
40,000.
40,000 over what? 800 units times the 20.
You get 1,000.
What are you getting?
1,000.
1,000. You're getting 1,000, right? So with this 1,000, let's also compute for the holding cost. Holding cost is also Q, which is the EOQ. EOQ over what? Here we can use the word EOQ over 2 times what? The ordering cost, the holding cost per unit, right? The holding cost per unit. So what do you have? You are having
1,800 divided by 2.
You're having 800 divided by 2 times 2.5, right? And that is giving us how much?
1,000.
1,000. So the total will be how much? 2,000.
2,000.
Is it giving us the least cost or is it giving us the?
Yeah.
Find the EOQ quantity to the 750 quantity. What do you have? This one is 2,000 and what? And 5. This is giving us 2,000.
2,005.
Now, which of them gives us the least cost? Which of them gives us the least cost?
At
Which of them
800
gives us?
units.
The EOQ basically gives us the what? Least cost. So I believe the principle or the explanation of the EOQ makes sense, right?
Yeah.
It makes sense. This is to prove that yes, EOQ gives us the what? The least cost. So that is basically what this question is talking about, right? So you can get something like this under your working capital management. You can get something like this. So you need to understand what you are doing. It's not difficult, right? So this is working capital management. This is just the inventory part.
Okay.
Inventory part. So inventory question can come and it can come in this form, right? It can come in this form. Let me see this. Okay. Can we try this one? This is a past question. A past question. Examiner is Dr. Vera Fadjo. So this is similar to what we did. It is similar to what we did. Okay. So can we try that one too? To see how it can come. So please read for us.
The Gabby Company Limited buys a part that costs 5 Ghana cedis. The current cost of inventory is approximately 20% of the part's value per year. It costs 50 cedis to place. It costs 50 cedis to place, process and receive an order. The firm used. I can't see that figure.
The firm uses 900.
900 of what?
Of the 5 Ghana
Okay.
cedis.
Of the 5 Ghana cedi parts per year. I. What ordering quantity minimizes inventory costs?
Please,
How many other?
pause. What is the meaning of the I? What is the I? What does the I want? Who can tell me? What is the meaning of the I? What does the I want?
The minimum order quantity. Oh.
Hello to everyone. What does I want? What is the meaning of the I? What ordering quantity minimizes inventory cost? Minimize what ordering quantity minimizes inventory cost? So what is the meaning
Economic
of the I?
order quantity.
Exactly. Economic order quantity. The question sometimes will not go straight to the point. What is find the economic order quantity? What is ordering quantity? Minimize inventory cost. It is asking you to compute economic order quantity. This is a past question for 2016, 2017. So if those people were not smart to know that this is ordering quantity that minimizes inventory, then they would not be able to. They'll be what is that? Which quantity minimizes inventory? But even the information given should even tell you that, oh, okay, then that will be inventory, economic order, or quantity. All right, so continue.
How many orders will be placed each year if that order quantity is used? What inventory costs are incurred for the part with this inventory ordering quantity? IV. How much savings will be made from switching from an old order quantity of 200 per order?
Okay, so the who can tell me what does the question want? How many orders will be placed each year if that order quantity is used? What? How do we get the or what is the meaning of the II?
How many orders will be placed? Is it not ordering, cost of ordering?
Cost of ordering is the total, right? Cost of ordering. Okay, do you give me the cost of ordering formula? What is the cost of ordering formula?
Is AD over EQ.
EOQ or EQ?
EOQ, sorry. Times
ordering cost per unit, right? Times
yes,
ordering cost per unit. So, and remember that I wrote at the top, check here. I wrote at the top here that what? That ordering cost is the number of orders times the ordering cost per unit. You want to know the number of times you order. So if that's why you an example, you want 100,000 for the whole year. If each time you order 100. Each time you order, there is 100 units in it. Then you order back 100 pieces in a row. And how many times will you order to get the 100,000? And then number of times you order, number of orders. That is what the question is saying. How many orders will be placed each year if that order quantity is used? I believe you are fine. Hello, can you hear me? I believe you are okay.
Please, I don't get it.
You don't get it?
Yes.
Look at this formula. What is the ordering cost formula? Read it for me. What is the ordering cost formula?
The ordering cost formula is annual demand over
The
quantity.
annual demand over quantity. Wait, this is just for this. Oh, look at this. This is for the number of orders, and the ordering cost per unit is for the whole of ordering cost per unit. And only so the number of orders is the AD over what Q.
Okay.
Times the ordering cost per unit. You know, if you order 10 times, it means, and each order you are paying $20. It means that 10 times order times what 20. To know the ordering cost because you ordered 10 times. And each time you order you are paying $20. So what will be your ordering cost? The ordering cost will be the number of times you ordered, right? Times the ordering cost per unit. If you order beer, you're paying maybe $20. So that is what the question is asking. What is the number of orders? And now, so that's AD over Q. Just that one.
Oh, okay.
How many orders will be placed each year? What is it?
Yes. Thank you.
That is what he's talking about. And then the R is what inventory costs are incurred for the part with this inventory ordering quantity. What inventory costs are incurred for the part with this inventory ordering what quantity. So here to what is he saying? It is talking about the word total cost. What inventory cost, total costs are incurred for the part of this inventory ordering what quantity. Just talking about what the total cost. All right, so let's solve it together without wasting my time. Let's solve it together. All right. Late night meeting. Wow. Okay. So now the I, right? This is for Gabby Company Limited. Question 2A. Question 2A. Gabby Company Limited. Gabby Company Limited. What? Or before that, let's list the item that we need, right? Make it easier for us. So what is the Gabby Company Limited buys a part that costs 5 cedis. So what is this? This is the what? The purchase price, right? Purchase price. So what is our purchase price? 5 Ghana cedis, right?
Yes.
Then he said that the carrying cost, the carrying what cost? I said that carrying cost is the same as what? What did I say about carrying cost? It's the same as the holding cost. What did I say? Here they didn't use holding cost. The carrying cost. It's the same as the holding cost. So the carrying cost of inventory is approximately 20%. That is the what? Carrying cost. All right. So carrying cost. So the carrying cost is how much? Carrying cost is how much? 20% of the part value. What I said. So that means like the first one that we saw. So that's 20% of what? 5 cedis. So how much would that be? 20% of one what?
1 CD.
1 cedi.
1 cedi. Okay. So that is 1 cedi. That is 1 cedi. That is 1 cedi. Okay. And then what else? What is our ordering cost? 10%. It costs 50 cedis to place what an order. Ordering cost per unit. So ordering cost per unit is how much? 50 cedis.
50 cedis.
What else? And receive an order, right? The firm uses 900 of the 5 cedis parts per year. That is what? Annual demand. Uses 900 of the 5 cedis parts per year. Annual what? Demand. Uses 900. Basically, that is that. Uses what? 900. So annual demand. Annual demand is how much?
900.
900. It's 900. What else? Now we can start with our EOQ. What is our EOQ? EOQ is square root of what? 2DCO all over what? Holding cost. So here it's carrying. Carrying what? Carrying cost, right? Carrying cost. Alright, so what is annual demand? So that is 2 times annual demand is 900 times the ordering cost is 50 all over what? 1 cedi. So what do you have?
300.
300 units. 300 units. Okay. Alright. So now that is our which is what is the ordering quantity that minimize inventory cost. Then how many orders will be placed each year if that order quantity is used? How many orders? So number of orders. Number of what? Number of orders is equal to what? Annual demand over EOQ. If you multiply the times ordering cost per unit, then we are getting the total ordering cost. So what do we have here? Annual demand is what? 900 all over the EOQ, which is what? 300 units. So what do we have?
3.
How many times do we order?
3.
Right. So 3 orders per year. 3 orders per year. 3 orders per year. Alright. Now what's the next question?
Aye.
What inventory cost? So inventory cost is holding cost plus what? Ordering cost. Do you remember? Inventory cost is ordering cost plus what? Holding cost or carrying cost. Right. You only include the purchases when there is a discount. Let's say 500. If you buy 500, you have a discount of 1%. There's a question like that. I don't think we can solve that question today. But let's see. Even if I'll meet you, it will still be online. It will still be online. Let's see. Okay. So now, then you have the total cost. Total cost is what? Ordering cost plus carrying cost. Here is carrying what? So what is the ordering cost? The ordering cost is what? Annual demand over EOQ times ordering cost per unit plus current cost is what? EOQ all over 2 times current cost per unit. Current cost. So it's minus 50. Alright, so what is the annual demand, which is 900 divided by 300 times
900.
ordering cost per unit is how much? 350? That is something like 50.
Ordering cost per unit.
Yeah, 50. Ordering cost is 50, right?
Yeah.
Then plus EOQ 300 divided by 2 and carrying cost of 1. So what then is our inventory cost?
It should be 300.
That'll be 300. Sorry, let me. That'll be what 300, right? So that is it for that. Then we go to the next one, which is how much savings will be made from switching from an old order quantity of 200 per order, right? So now EOQ is giving us a cost of how much? EOQ is giving us a cost of how much?
300.
It's giving us a cost of 300. Now giving you, look at this. They are giving you 20 quantity, order quantity of 200. They are giving you order quantity of 100 to detect cost too, right? It's like the first one that we did. When the first one, they give us some order quantities, various order quantities, 500, 750. This one they're giving you to determine each cost. If you determine each cost, you compare it to the EOQ. You compare it to the what? EOQ. So without solving, which of them do you think will even be there? Will be more? Without even solving, which of them do you think will be more? Is it the EOQ or the 200 per order?
The 200.
Hello, can you hear me? Which of them will be
Yes,
more?
sir, the 200. The 200.
Yes, the 200 will be more. Yes,
Yes.
200. So the 200 unit will definitely be more. So the 200, what is the ordering cost? Ordering cost is annual demand. What is annual demand here? 900.
900.
900 what? Divided by annual demand by 200, right? Times ordering cost, which is 50, which is 50. And that is giving us, or let me even make everything one. So let me say inventory. And then this one is what? 200 divided by 2 times how much? 1. So what do you have?
Today, 25.
3 what?
325.
325. So definitely the 200 will be more. EOQ, nothing can be more than EOQ, right? EOQ gives us the least cost.
Yeah.
So the question is asking, look at the question. Look. How much savings will be made from switching from an old order quantity? How much savings will be made from switching from an old order quantity of 200 per unit? So you see that initially you were ordering 200, but now you are using the EOQ 300. So how much are we saving in terms of the cost?
$25.
Okay. So what will be the savings? So the savings will be how much? 325 minus 300. And that's giving us how much?
25.
So you are saving 25 cedis because you are using the E. So you see how easy it is. That is with the inventory management, how it can come, how the inventory management can come. Let us quickly move on to the cash management. With cash management, move on with the word cash management. So the cash word management. The cash management. Then we come to receivables and then payables. Okay. So now we can start with our cash. So with the cash management, so we are still under the working capital management. That is the first topic. And this, we are done with the inventory management. Moving to the cash management. Then we come to the receivables management, the payables management. So with the cash management, can I have something like, why do we manage cash, right? Sometimes it could be that when you look at the balance sheet of various entities, you can see that sometimes they have a lot of cash sitting in their books. And then sometimes you see that they have a little cash in their books. Each of them comes with what its effect or its consequences. So people will be like, why is it that the firm has a lot of cash in their books and they are saying it will have a negative effect? A company that is having a lot of cash and they are saying it will have a negative effect. Yes, having a lot of cash in the business doesn't show that you are really, or it is a good thing, because that cash can be invested in other short-term securities which are going to generate what interest, but we are keeping that cash in the business, in the coffers. So you see, it's not good. So in a way, you are losing some form of interest, but you could have invested those cash in short-term securities like the T-bills and whatnot. So all these things are there. Right? So there is therefore the need for us to manage what our cash. There is therefore the need for what to manage our cash. So what are some of the reasons for holding cash in the first place?
For transaction.
For holding cash. So what are some of the reasons? Yes.
For transaction purpose.
For transaction purpose.
This one they've placed the link there too. Anybody can join.
What was it?
Wait, what school? Is it economic We other part. No, guys, they didn't catch money. I need to put.
So for transaction purposes, then for
Like
for precautionary what?
one.
For precautionary purposes.
After the protest,
You use the pound, then you go to sleep.
then maybe it's nice.
Hey, that's it.
Roll and not it.
What else? For speculative what?
No, she was okay. That was okay. Why? What was saying was
For speculative what? Purposes. For speculative what? Purposes. Right. So yes, for transaction purposes. So we need to
doing this
hold cash to be able to pay our expenses and then settle our debt, to pay our short debt, to pay our short-term debt, to pay our short-term debt. Free.
Doing this.
So to pay our short-term expenses and then debt, settle our debt. That's the reason why we need to hold cash, right? For transaction purposes, expenses and then settle our debt. For precautionary purposes, is to make what? Unexpected or unforeseen what? Payments, right? So we have to pay our expenses and settle debt. And then this is for unexpected, any unexpected what? Any unexpected or unforeseen payment. Unforeseen what? Payment. Then speculative reasons. Why do we hold cash? So we hold cash to be used for what? Business opportunities. This one is what? For business. Maybe if some opportunity come and don't have cash on you, how can you grab that opportunity? So for business what? Opportunity. That is for speculative what? Reasons. Opportunity. Alright? Opportunity. Any business opportunity that may arise. That is one of the reasons for what? Holding cash. Alright. So now there is what is the objective of what? Holding cash? So that is to hold sufficient what? Cash or money to be able to meet your what? Your liabilities as they may fall due, right? Right. And also to make sure that you don't hold enough cash, right? As I said earlier. So there is therefore the need to prepare something called the cash budget. The cash what? Budget. So cash budget. There is therefore the need to prepare cash budget so that we know that, oh, okay, these are the things that will be needing, right? These are our receipts. This is a receipt that we'll be expecting. This will be our payments. So that is receipt and payment, right? Cash book, remember, the accountant. So there is the need to prepare what is known as what? Cash budget. Cash budget. Cash budget. So what is a cash budget? So this is a detailed what? Detailed plan of cash receipt, to know the cash receipts and cash payment. Cash receipt and then cash what? Payment. Cash receipt and cash payment during a planning what? Period. During a planning what? Period. During the planning period. So what are some of the uses of the cash budget? What are some of the uses of the cash budget? What are some of the uses of the cash budget? Uses of the cash budget? What are some of the uses of the cash budget? So basically, to forecast how much receipt and payment are expected to be what? To forecast how much cash receipt. So cash receipt is the cash that will be receiving, and payment, cash receipt and payment are expected what? To be over the planning period. To be over the planning what? Period. To be over the planning what? Period. Right. What other uses